The United States is getting closer to adopting its own version of cryptocurrency. This is from our United States Department of Treasury, and what they said is that a CBDC, which stands for a central bank digital currency, would involve both a new form of central bank money and potentially a new set of payment rails. This press statement by the Department of Treasury was released in March of 2023, and it's going over what our domestic finance secretary said in regards to now researching how to move forward with something like potentially a CBDC, a central bank digital currency. And the reason why they're discussing this is because in 2022, President Biden signed an executive order which called for a government-wide approach to the responsible development of digital assets. According to the statement by the Department of Treasury, there are two main ways that our government and the Federal Reserve Bank is looking to change our money. Option number one is by doing something like a CBDC, creating our own cryptocurrency and digital assets for the United States. And option number two, which they said in one sentence that they never really highlighted after that, is a real-time payment system where essentially you're doing like wire transfers in real time, and that would be the new way that money is transacted. But they didn't really discuss it after that. The main focus of this entire press statement is the CBDC, how to enact it, what it would mean, and the different types of CBDCs, because they're proposing creating different types of money for banks and different types of money for people. Now, I've already read through and analyzed this entire statement, but if you want to read it, you can read it on the Treasury Department website, and I'll also link it for you down in the description. But what they say regarding CBDCs is that it would need to have ideally three features. Number one, it needs to be legal tender, aka it needs to be treated like real money. Number two, it has to be convertible one for other forms of central bank money, aka you got to be able to convert this cryptocurrency digital money for a dollar with a 1-to-1 ratio. And number three, it has to settle clear and nearly instantly, meaning it has to be instantaneous transactions. These three factors is what our Treasury Department calls the structural part of our money. The second part that they discuss is the design side of our money, which is where they're now talking about different types of money. They said that we could potentially have a wholesale CBDC, which would be money for the banks. We could potentially have a retail CBDC, which is money for regular people, and then maybe a combination of both of these different types of money. They're saying that a wholesale CBDC could be a tokenized central bank liability. Essentially what that means is that you would have this specific type of money. It's called a wholesale CBDC for banks. And this is money that banks would transact with other banks, and it would allow banks to now settle and make transactions around the clock instead of just when the bank is open. And now this would be its own currency just for banks. The retail CBDC is a little bit different. Now, of course, we keep you up to date with what's happening in the latest financial news. That way you can be an educated and smarter investor with Market Briefs. Market Briefs is my free financial newsletter. You can read our newsletters in less than 5 minutes every morning, and my team is breaking down the things you need to know as an investor. So if you want to join Market Briefs, it's completely free, and I'll put the link to how you can join Market Briefs for free down in the description below. So now, with the retail CBDC, what they say that the main difference is accessibility features, not technological features. What they say is that unlike central bank reserves, a retail CBDC would be a digital liability of the central bank that is accessible to the general public. So what they're saying is that this is going to make money more accessible and easier to access by regular people, because now you're not going to have to go to a bank to access your money. You can do it right off your phone digitally, because now you're going to have access to a wallet like any other cryptocurrency platform out there. This is going to hold your money, and then now you can transact with this money or make transactions with this money, but it's going to be digital, so you don't have to physically carry around cash and worry about taking cash to a bank. It's all digital with your app. And in case you were wondering, it does not say that the government is going to be creating these digital wallets. It says that these digital wallets will be created by private companies. This is where things get really interesting, because now the statement starts to discuss why the government is really interested in a CBDC. Now, they say some things, but don't highlight some other things that I want to mention as well. But what they're saying is, now with the dollar being the world's reserve currency, the United States is the world's superpower, why do other countries confide in the dollar? And the reason why, according to this article, is because of the structural benefits of the dollar. And the structural benefits of the dollar that they discuss here is the strength of our economy here in the United States, the law and order that we have in the United States, and pretty much the safe haven of the United States. So because the United States is the world's superpower and we transact with the dollar, countries around the world feel safe keeping their money in dollars. And so what they're saying is that the CBDC is more of a design change rather than a structural change. So that's not a major reason why they want to do the CBDC, but rather they say that they want to do the CBDC as a means of inclusion to get more people involved and be able to transact with money, because we in the United States here have the lowest amount of people per capita who have a bank compared to all the other G7 countries around the world. And so if we have a CBDC, that it would allow more people to be involved in our financial system. And if we lead the way with the CBDC and this new way of money, that we could be the leading cutting edge of how we transact with money and create an international monetary system that is created and led by the United States. But the big concern that they talk about is national security, because now when we go online, we have to make sure that we continue to protect the dollar and a national security system. Now, one thing that I thought was interesting that wasn't mentioned in this section was anything to do with taxes. Because now when you have cash, you can move cash around and it doesn't get notified by the government unless you move this cash into a bank. Like if I took $500 and I went out and I bought a pair of shoes for my friend and I gave him $500 and he gave me a pair of shoes, that transaction isn't going to be taxed unless he reports that money on his tax returns. So if you go out and you do some things, like maybe you're a photographer or you have some other side hustle where you're selling things, you're getting cash and you're not reporting that income, you don't pay taxes. Now, yes, that is illegal, but it does happen. Now with the CBDC, what it would also do is it would make taxing things much more efficient, because now any transaction you do, if it's digital, it's going to be tracked, which means that taxes are going to happen on really every transaction, because now it's going to be hard to hide something when everything is digital. So just something to think about in terms of taxes, because while there are a lot of benefits to a digital dollar, like I only transact with my credit cards. I don't like carrying around cash. I do carry some cash with me. I don't have a debit card, but I love using my credit cards because it makes it so convenient. I prefer not to use cash. Well, with a digital dollar, it's kind of going towards that trend where everything is digital. But now on the tax side, it's going to make the taxing side of things much more efficient, meaning everything will be taxed. Every transaction can be taxed because the government will be able to see every transaction that happens. So pros and cons with that as well. Then this statement goes into the next steps for the CBDC and how to actually get it created and implemented. And what it's saying now is that because of this executive order, because of this new research, that now you're going to have all these different departments, from the National Economic Council to the White House official to the Federal Reserve Bank to the Treasury Department, all meeting regularly to discuss a possible CBDC and other payment innovations. So it seems like now we're going to be seeing a lot more information coming out about the central bank digital currencies. We're going to have more meetings happen to discuss, one, if a CBDC is a good idea, and if so, how to implement it. But what it seems is the idea that many entities are leaning towards is a CBDC. So we'll see what this means in the coming years, but I would love to hear your thoughts on this. Is a CBDC a good idea, a bad idea? And if so, what should be done? Let me know down in the comments below. What happens if you're getting close to your retirement age and then a recession hits? Then what? We saw this happen before the 2008 crash. We saw this again in the 2020 crash, where the market crashed and people were selling out of their retirement accounts at huge losses. But what if you could get paid while you wait for your investments to grow in value? That's exactly what you get